still depreciating your 2300 laptop or office chair over 5 years? For many small business owners, you don't need to. The IRS gives you a simple annual election, which is the Minimis Safe Harbor, so that lets you expend many tangible purchases right away instead of tracking depreciation schedule. Aloha, I'm Mia. I have been helping freelancer and small business owner simplify their deductions and stay audit-proof for over 15 years. A quick disclaimer, this video is for educational purpose only and is not tax, legal, or financial advice. Today, let's break down how this rule really works for 2025. Under the big beautiful tax bill, what changed, what hasn't, and how to use it correctly so you can stop over-depreciating, simplify your book, and keep more cash in your business. Let's get into it. Here's the deal. If Safe Harbor rule isn't new, but it's one of the most underused deductions for small businesses. So let's go line by line so you can actually understand it. First is the threshold. That's the $2,500 threshold rule. If your business doesn't have an audited financial statement, or short for AFS, and most small businesses don't, you can expend up to $2,500 per invoice per item. If you have an audited financial statement, the threshold increased to $5,000. So the amounts haven't changed under the big beautiful tax bill, which is short TOB3, but with bonus depreciation restored to 100% and Section 179 limit expanded, this rule is now more valuable than ever for simplifying your smaller purchases. Think of it like a mini Section 179 for everyday expenses. No form, no limit, based on income, no phase out. 2. Making the election each year. This election isn't automatic. You must attach a short statement on your timely file original return for each year. The statement should be titled Section 1.2638-1F, Minimis Safe Harbor Election. So that's it. No extra forms or worksheets required. If you forget it, you lose the election for that year. When I review returns for clients, I always look for that statement. And if you would be surprised how many self-employed filers miss it simply because they thought their software did it automatically. So in most programs, you still need to check a box that tells the software to print and attach the statement, so don't skip that step. Third, have a simple policy in place. If you don't have an AFS, which is audited financial statement, you are not required to have a formal policy, but you do need to expend these purchases consistently in your books. The IRS expects that your records show you treat small purchases and expenses under your accounting procedures. So, at the start of the year, write a one-page note that says, our business expenses tangible property costing $2,500 or less immediately under the Minimis Safe Harbor. Date it, sign it, and keep it with your tax record. If you do have an AFS, you will need a formal written policy, but for most Schedule C owner, a simple memo is enough. 4. What kind of property qualifies? So this rule applies to tangible property, things you can touch and use in your business. For example, like furniture, tools, computer, monitor, office equipment. You can also cover qualified materials and supplies if you make the election. But it does not apply to intangible property, like most software licenses, patents, or trademarks. They'll fall under Section 162 business expense or Section 167 amortization. So, if you are buying QuickBooks Online or Adobe subscription, they are just regular expense. But your MacBook and Office desk fall under the Safe Harbor. Number 5, invoice and cost rules. If shipping, installation, or setup fees are listed on the same invoice, they count toward that $2,500 limit. If they are on a separate invoice, they are treated separately. That means you can't split a single purchase into 2 invoices just to stay under the limit. The IRS look at substance over form. Just save each invoice and make sure you understand how the costs are grouped together. Why this matters? This rule might sound boring, but it actually has real impact on your time and cash flow. It lets you expand small purchases right away instead of keeping track of them for 3 to 5 years. It keeps your book clean, no mini assets list for mice, monitors, and toolkits. It's also reduced audit risk because your policy, invoices, and annual election tell a clear story. And for many self-employed people, that means instant deduction and a lower tax bill without the extra paperwork. Let's make this real with some actual client example. Let's talk about our first example, who's Anna from Honolulu. So Anna runs a design studio called Anna & Co. Creative. She bought a MacBook Pro for $2,300 and an ergonomic chair for $900. Before she met us, she was depreciating them over 5 years and complaining about why her tax software asked for useful life and asset class codes for every little thing. So we showed her the Safe Harbor rule, attached the election statement to her return, and updated her QuickBooks to expense both items immediately. That year, she saved roughly $700 in federal and Hawaii tax combined, and cut out 4 pages of depreciation schedules. Now, she used our smart asset expensing tracker from production on Etsy to tag purchases as she make them. Let's talk story number 2. Mike and Austin. So Mike's owed a Solid Build Contracting LLC. He bought 5 power tools for $400 each from different suppliers. Under the Safe Harbor, we expense each purchase right away. Before, he had over 40 line items on his fixed assets ledger. After we adopted the policy and made the election, his bookkeeping time dropped by half. He joked, "It feels like spring cleaning for my tax return." Let's look at another example. Sarah in Denver. So Sarah runs Bright Vision Educational Kits. She bought a $3,200 printer for testing materials. So that was too high for the Safe Harbor, so we used Section 179 instead. So under the big beautiful tax bill, 179 was expanded, so she still got 100% depreciation this year. If you haven't seen this video yet, you can check out the expanded Section 179 write-off, and also another video on business vehicle rules where we talk about how they fit together. I want to share with you some strategy that you can do for tax planning, because in tax, the most important thing is the planning part, so you can save more, right? So you can create somewhat of an easy or repeatable system for your business. So step 1, remember to make the election every year. So you can add this to tax checklist or planner. You can add DMSH, election statement to return. So DMS is just the short for the Minimis Safe Harbor. So if you use software like ProConnect or Drake or like TurboTax, other kind of software, check the Minimis Safe Harbor election box to the statement and get it printed automatically. If you work with a CPA, you can ask them explicitly, did we attach the Safe Harbor statement this year? Once it's attached, you have covered for the whole year. Miss it and then you lose the deduction. Step 2, adopt a short internal page. You can write 1 page. For example, we expend items $2,500 or less, or $5,000 if you have audited financial statement. Under the Minimis Safe Harbor per regulation Section 1.263A-1F. Signed and dated. Keep a digital copy and printed copy with your tax record. That simple page document becomes your audit defense. Step 3. Track invoices and receipt. So inside QuickBooks or Wave, create a folder called 2025 Smart Asset Expenses. When you buy something under $2,500, upload the invoice and mark it DMSH expense. At year-end, export that folder into a PDF or Excel list, and boom, you have your supporting document ready for tax season or a tax audit. Step 4. Pair with a Section 179 with bonus depreciation. So you can use Safe Harbor for the small stuff, like the stuff 2,500 and below, right? And then use Section 179 for bonus, and bonus for the big stuff. So for example, if you buy a $2,400 monitor and a $35,000 truck, the monitor go under the Safe Harbor and the truck is under Section 179 or bonus depreciation. But how do you layer these rules for maximize deduction? Our Smart Asset Expensing Tracker in the Pro Deduction shop does it automatically. It flags which item qualify under Safe Harbor and which belong under Section 179. Step 5. Avoid double dipping. Once you expense it under the Safe Harbor, you can't depreciate it again. Keep a list called expense under DMSH, do not depreciate. That way, if you sell the item later, you know how to handle the gain properly. We teach this record system step by step in our Access-wide Institute deduction, Defender by the course. Some bonus tips to make this even stronger. Tip number 1. Include materials and supplies. Say if you buy testing kits, replacement parts, or consumable supply under the threshold, you can include them under the election. For example, a dentist buy a $1,200 worth of single-use kit each month to treat them under the Safe Harbor if the election is made. Tip number 2, understand software rules. Most software is intangible, so the Safe Harbor doesn't apply. But monthly subscription or cloud services can still be expensed, normally under Section 162. If you bought a one-time license for perpetual use, so that might need to be amortized under Section 167F. So we break this down in the other video, digital tool and software deductions. Tip number 3, know your disposition rules. Because you bought, you expense it, or you depreciate it. Now, if you sell it, especially for a gain, there's gonna be recapture, right? If you sell an item you previously expensed under Safe Harbor, the gain is usually audited income, not capital gain. You want to keep your invoices and sales record so your CPA can handle it correctly. Tip number 4, do a year-end review. Every December, run a QuickBooks report of purchases under $2,500. Check that they are coded as expenses and you have receipt attached, and that the election statement is ready to go. Doing this before January saves hours in March and keep your return audit ready. So here's the bottom line. The Minimis Safe Harbor hasn't changed under the Big Beautiful Tax Bill, but it's still a powerful tool to simplify your deduction and free up cash flow. You can pair it with Section 179 and bonus depreciation for bigger assets, and you will have a complete expensing strategy for 2025. So put your comment in the comment section, like and subscribe the video and share if you like it. And thank you for watching. I'm Mia. I see you at the next video update.